Hey, good afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader. Welcome to How to Make Money Trading Stocks and Options, plus some trading tips. I'm going to basically, let me get over here to Steve real quick and get him promoted up to the promote to panelist. And hey, Steve, how you doing? And there we go. So it has been a very interesting week so far. Steve, you want to give us a radio check? Just make sure you're loud and clear.
Testing, 1, 2, 3.
Gotcha. You're loud and clear. Awesome. Good morning. Morning here in Hawaii. I will throw out a question to you, Steve. You can contemplate it because we'll come back and I'll ask it again before we're done, just as you're getting ready to present the stock. One of the things I thought would be interesting to share with folks is, I know you like to do research in the market and research in trading and all that kind of stuff. And so what I'm going to ask you is very simply, what are you working on special right now? And so you think about it, and then I know you'll be able to answer it just right off the cuff, but we'll get in and I'll ask that as we get a little bit deeper into today's session.
Okay, glad to do so.
Okay. So don't just survive, but thrive in any market. That's what we're about. Basically, the market is in a corrective mode. However, just off the top of your head, okay, without looking on anybody else's paper, how far is the market, is the S&P down from the high a couple of weeks ago to the low of the day? How far has it dropped? Steve, you can't answer that. Just type in your answer. And if you're joining us in the comment section, that's interesting, Steve. Jeff, 5, okay. 7, okay. Halfway. Okay, Eric, halfway to what? From here to eternity. Anyway, our sessions that we plan every week are basically to provide, the active trend trading system is a clear and simple system design that I designed basically to maximize profits, minimize losses, but also be usable by somebody who's really, really, really busy. We do this webinar every Friday at 11 a.m. Pacific time. And we cover the market index review, master trading tip, and also a stock pick for the week. Steve's got a good stock pick for today. I don't think he's ready to just jump right in it, though. But who knows? He may surprise us when we get to that point. Just a reminder that all the materials we do are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So here's my trading tip for you guys. I was reading headlines, and when people put out headlines when they're doing YouTube videos, or they're trying to get your attention, it's always they want to grab your attention, so you'll spend some time with them. And I saw one today that said, "Stay out of the market until you see this signal." I thought that was a really classy and really good attention-getting headline. And I'm basically kind of saying the same thing here. Don't trade the new lows, because we've had some new lows. And I'm not talking about the hardware store. I'm talking about new lower lows. Don't trade them, because they usually lead, the new lower lows usually lead to new lower lows. And so oftentimes people will start to jump into the, trying to over anticipate the bottom, or where they think the bottom is, and they wind up, basically getting their face ripped off, especially if they're trading options, and or oftentimes trading leverage ETFs. You can get your face ripped off because you over anticipate the low, and you do it over and over again, hence the term whipsaw, where it came from. Let price action prove itself. That's the bottom line. By retesting towards the new low or the lower low, and then if it does not go down to that level and it starts to bounce, you have the first part of a new uptrend in place. And that could be a higher low. And look for convergence of clues and confluence of clues that also lets you know that a bottom is in. So with the market selling off the way it has done over the last couple of days, we know that price actions may very well continue to go down for a little bit. So let's take a look at where we're at with that. Basically, active trend trading, we're up about 1.5%. The indexes are up. They have been up more. I find it very interesting that the NASDAQ itself is, just up about 1%. It's really struggling. Remember how strong the NASDAQ was last year, and the Russell, how strong the Russell finished up. Russell is still showing some strength. S&P, kind of the stack right now is the Russell's on top, S&P next, and the NASDAQ is right there at the bottom of the pile. And you look at its chart, which we're going to do right now, and you'll see that's exactly what's going on. Let me make sure I have the correct chart up here. Yeah, we've got the daily on the right. We've got the weekly on the left. This is the spiders. And one of the things I asked to start off is how far is the S&P down for the year? And I just use the spiders as, so if you go up here to the past high from the 16th of February, let's grab the hold of the high down to the low of today. Try to grab that. There we go. And to bring that down to today. It was down 4%. Now, I would like to see us get a correction deeper than that, maybe down to 10% or so, 8 to 10%. How far down is 10% from the high of the mid part of February? Well, guess what? It's all the way down at the bottom of that resistance or support zone, which happened to be the old breakout area. See that? It's 10% down to that level. So those are areas where you can mark on your chart. And one of the things, when I do get a turnover, like we're having right now, I will go in and I want to project down. Where's a 5% correction? Where's a 10% correction? Where might those take place? Right now, we're just getting, 4%. That is not, people are just wringing their hands about a 4%. That's, that is just basically a normal pullback. How far was this pullback over here? Well, that pullback turned out to be about 4.5%. And so somewhere 3 to 4% is a normal pullback on the S&P. One of the things that is of note that I will show that could be a confluence of clues for a potential further drop in the markets, and that is Tuesday, Wednesday, Thursday, and Friday of this week. What do you see that's different from the previous uptrend? And if you say the range of the daily range of the movement, you're absolutely right. It's a really wide range, wider range than it has been over the last, several months, if you will. And we are testing, again, at lower levels. A close below the 50 would give us an idea that we are going to probably run down a little bit deeper and get a little bit deeper into the correction. What about the Qs? Take a snapshot in your mind of what the spiders look like and the Qs. What we have with the Qs, similar type projection. However, what's going on with the Qs? It basically wide range, Tuesday, Wednesday, Thursday, and Friday. Closed Thursday below the 50, bounced right up to the 50-day moving average, stopped dead in the water, and is basically looks like it wants to push down further. Now, again, do I want to buy this low? The answer to that question is probably not. However, I could take and say, hey, this was a low on Tuesday, so maybe this is an area of interest. one of the things, as I was saying, stay out of the market until. I've been doing a lot, as I was sharing with Raul earlier this morning, is I've been doing a lot of research with the market going into correction. And one of the huge things that is to be aware of is what is the momentum indicators doing? And as long as the momentum indicators on the weekly chart or daily chart and the weekly chart are pointed in the down direction, it is not a time to be overly zealous in taking long bullish positions. We want to wait for a shift in the momentum, along with a level bouncing area off of a level of support and a reversal candlestick. Right now, do we have a reversal candlestick on the Qs? The answer to that question is no, we do not. So for right now, I'd be looking at any type of a pullback back up into the 820 or the 34, or even a failure at here at the 50 could give us a potential, trade to the downside on the Qs. IWM, looking a little bit better. There you go. In that we're hanging way above the 34, above the 50. We are getting a close below the 20. That could be problematic. However, we're in a nice uptrend. All the moving averages are stacked to the bullish area. The downside on this particular one is TSI heading down, longer term momentum on the market forecast heading down. The market forecast on the weekly slightly started to turn over. And again, we have the TSI headed down and has crossed over to the negative side. However, it has not dropped that 42 number, which is kind of our upper reversal zone. If that in fact does happen and it breaks down below that on a weekly chart, I would be looking at, just hanging with it till it could hanging with it to the downside. And I want to go back here at QQQ just really quick. As you can see, QQQ, it basically bounced up and hit resistance. That 42 level worked as resistance, stopped it dead in its track, and now it is actually broken. Momentum has broken to the downside, and so we'll see what transpires. And so that's what I'm looking at right now, Steve. I'm favoring more trying to short-term downside trades on especially the NASDAQ, a little bit of neutral on the Russell, and less neutral on the S&P. So I'd be looking at trading Qs to the downside, or Russell. I would look for a Russell to bounce earlier than the NASDAQ, but that's where I'm at. So what do you think?
I agree pretty much completely with what you said. I think we're in a very iffy moment in the market. We're at a cusp where it could resume an uptrend or break down to go lower.
Right on.
And I don't know what's going to happen. And I agree with your comments on momentum. I think the first sign we'll see about direction will be a change in momentum, either up or continue down. And
okay.
Right now, we don't know what's going to do.
So as I'm bringing up the chart you want to be talking about today, you want to just let people know what you've been up to as far as, what things have you been researching?
Researching wise, I'm looking at, my mantra has always been and continues to be, and I'm trying to get better at it, is trading with trend. So I've got a pretty good trend system down, I think, and I'm trying to fine tune not so much my entries as my exits.
Oh, okay.
From trends. When trend is about ready to change direction or ease off, I'm looking to get more efficient at exiting.
Okay. Cool.
And
it
looks like it's mostly a measure of momentum, or an indication of momentum that is probably going to be the difference.
Yeah, well, as I went back and I reviewed my results from last year, which I was pleased with the results from last year. And as we got into going into this year, what I started noticing was that I was getting whipsawed a little bit more this year than last year. And so I'm going, what's going on with that? And so as I got back and I did the analysis, what it was the turnover of the, excuse me, of the momentum.
Yeah.
And then utilize, and I'm going to be doing a presentation for our premium active trend trading members on this very soon, is when the momentum shifts on a weekly chart and a daily chart, only trade in the direction of the momentum shift.
Yeah.
And use the intraday half hour or hour chart to trigger into trades when its momentum on that time frame is at their lows. And the flip flop of that also works in the same way. So tell me about LGND.
It's Ligand. It's been in a nice trend. We're in a very nice pullback, and it's an area where it's starting to give me some indication that momentum is turning back to the upside.
Okay.
So I'm interested in taking a long trade in Ligand, but I wouldn't do it today.
Okay.
I'd like to get more information about what the overall market is going to be doing.
Roger
it
that.
looked like for a while it was starting to turn to the upside this morning, but it's eased off, and it's a bit unclear about if it's going to continue down or bounce and go higher. So I'd like to get some indication of that occurring, bouncing higher, for me to take a long trade.
Right, Roger that. Yeah, I would. I agree with you. Wholeheartedly on that. One of the things I would be also, that's a new lower low right there. And as I pointed out in the trading tip today, we want to see some kind of a retest back towards that. Now, this may be it. That may, the last 2 days, that may be it. It stopped at
Right.
the 50-day moving average, and it may rebound from there.
Right.
However, today's candlestick, today's candlestick does qualify as it's below the low of yesterday.
Mm-hmm.
And so I have and if I want to, I could take a trade, I would say, breaking out, above the high of the low day. And today is the low day.
Right.
And so, yeah, or if we drop on back down here, that's okay too, because I'm
Right.
It's looking good, but yeah, I like it. Really good job. So,
Yeah.
Hey, Barry asked a question. At what point would on the Qs would you have a high degree of confidence that we're heading down further in a substantial way? Barry, I'd have to ask the question, what do you mean in what's a substantial way? Oh, okay. I basically, that's a great question. Should we remain bullish if we're above the 50-day moving average? And I use the EMAs for the 50, but I'll just take a real quick look over there at the Qs again.
Yeah.
That is
the issue there is the Nasdaq's broken the 50, while the ES has not.
Yeah, it has. And so as you can see here, it has already broken the 50. And so now, how much further? Let's just throw a line on here. Go from there, not there. Stop that. From there we go, down to these lows over here. That's about an 8% drop. So that's getting into the range where you can anticipate the potential move higher. Where's a 10%er? 10% is down here, just on the fringe of that past breakout area.
Yeah.
So here's where the question I would prefer, or the question I would look at is, where would I consider a downside trade? Well, for me, I would consider a downside trade on the Qs if it gets back up into the moving averages. That may be gets back up into the 8, the 20, the 50-day moving average. And that's where I would consider a downside trade. If, of course, we break below this level, because we have now set up did we get a close below it? We have not had a close. We have not had a close below that low right there yet. We
Correct.
did get a close below that low. So we do have a setup for lower lows and lower high and lower high. So if we basically take out that 310 level, that actually gives us a trajectory to the downside of somewhere between 310. I'm doing this straight off. 38 to 310 is what, 20, about 28, 27. So if I drop 310, I could project down from a technical standpoint, down 310 minus 27. Do the math.
Yeah, I agree with you. And I think the issue is waiting to see what the market does.
Yeah. And that would take us down, and that would take us down to 283. And so then I would be looking at, well, do we have a level of support down there at 283? Well, look at this. We've got that trend line there. And we've also have this breakout area over here around the 283 level where it went back into a strong move up. So great question. Yep, you got it. So, okay, cool. Hey, and I want to share you with real quick, Steve, what I've been working on. I was approached a few weeks ago by somebody who was asking the question about how do I, or not how do I, but how they could take a few thousand shares of a stock that they had inherited that has weekly options. How could they turn that into a tradable or some cash flow type process, cash flow, weekly or monthly cash flow opportunity? And they had several thousand shares of this one company. Then the company, you know, it's not a growth stock, but it does have weekly options on it. And I said, well, heavens, if you could pick up, you know, twice a month, if you could pick up clear 50 cents on 2,000 shares, well, that means for the month you would have picked up $1. So that's $2,000 in extra monthly cash flow. And I'm going, this is pretty interesting. So what I'm doing, Steve, right now is I'm working on, I'm looking at Ford. Ford, I think, is the number 2 auto manufacturer right behind Tesla, according to Investor Business Daily. And so I'm projecting out on Ford is when can it has weekly options. I've bought some shares on this. How can I give a trajectory of where it might go? As you can see, we've turned over. And what I'm working with is Fibonacci extensions. And you'll see the little grid over to the right-hand side. This is both price Fibonacci's based on the symmetry of a move from this high to this low, projected over to, if this is an important high, 100% symmetric move would take me down to about $10.60. And it's a low price stock, and so it's just a lot of fun doing this. That's where the 100%, the 78% would be right at $11. You see, well, $10.99. And the other thing I wanted to project out is what would be the timing. So my timing is I project out here of the move from here to here, and then projecting that same timing from here says that I should get into that little purple box right there, somewhere between the March 4th and March, and this is out here is March 6th. And so now I'm going to be monitoring. I've actually taken and I sold this morning the call that expires next Friday. I sold the $11 call when the price was where it's at right now. I took in $1 worth of premium. Now I will buy that back if it gets down to 50 cents, or if it gets down to, I'll buy back half of it at 50 cents and half of it at 25 cents. And then my stop will just, I can just basically let it run all the way till there. And we'll see what happens. So I'll report back to you. So that's what I'm working on. But I love this little grid layout for projected places where prices have a significant probability of going. So I'll keep you guys posted on my research on this puppy.
Sounds good.
Okay, so let's run through the rest of everything else here. Okay, hey, I just posted over to YouTube last night a free video, and what it's about is how to utilize the on-demand trade simulator from Thinkorswim that is on the Thinkorswim platform. And so if you want to know how to do this, this is a very thorough video, a how-to video, a tutorial. Take a look at that because, you know, what I basically say here is, you know, I used to fly the aircraft on the left-hand side off of aircraft carrier, but the point is they wouldn't let us close to an airplane unless what? Unless we had done simulator time. So, you know, let's not let our trading capital, our trading accounts make a big burning, you know, smoking hole in the ground because we've failed to learn and practice how to trade. So I'll leave you with that. And just another quick reminder that, hey, our autopilot trading system is going well. There's the link to get hold of that. That will be put in the comments on YouTube. Simplicity is the ultimate sophistication. So remember that. All right. Thank you, Michael. I appreciate that. Yeah, if you do have comments, please leave a comment there on the YouTube channel. And also, you know, that's a free service. Just recommend it to your friends who are interested in trading. If you don't know where the YouTube channel is, it is Market Tech Talk. Let me show it to you. It is right there. You got this handsome guy over here talking too much. And so it's down there, Thinkorswim on-demand tutorial, how to simulate real trades. And so, and I also go over how it doesn't simulate some of the real trades. So until next time, Steve, thank you for joining. Great stock. And I like what you're working on. And he may have dropped off already. No, I think he's still there. Muted. And go ahead, Steve.
It's also a pleasure. My pleasure to be with you and to share some of these ideas. Yeah.
Awesome. So until next time, aloha, God bless. Keep sharpening this up. Aloha. Say again?
Just saying thanks, Dennis. Aloha.
Okay. Thanks, Rao. And remember, guys, next Tuesday, if you haven't signed up for it yet, we're doing the Bay Area Moneymaker at 6:30 Pacific time. The invitations will go out. And the thing about it is I am modifying the Bay Area Moneymakers, where basically it is open to anybody who wants to attend. And we'll do our Zoom meeting. And so, again, if you're joining us on YouTube, please subscribe, hit the bell, to find out when we will be posting. There'll be a really great video coming up there about Fibonacci's and how to use them. And remember to give us a nice thumbs up and ask some questions there at YouTube. I really love it and answer the questions. So until next week, aloha. Thanks for joining us. This video will be up sometime this afternoon. Aloha. God bless.